crude oil. Oil, to put the cliche again out, oil has been on the boil because of all the Middle East tensions. It's hitting levels that it saw in October 2023, in fact, breaching those levels as well. How do you see oil going from here and that impacting equity markets across the world, including India?
Well, I think maybe, gold has been telling us, or the gold price has been telling us that there's kind of a discomfort regarding inflation, and also, some of the tensions which have been picking up in the Middle East. We'll have to see how, Israel and Iran, what implications they have, for the recent kind of problems, because that's really what's going to move the oil price, and whether that's temporary and whether, something, moves quicker in terms of the world kind of coming, to Israel and trying to get a ceasefire, and so forth and so on. So, it could be a spike up. But then that would force, I think, a lot of countries to kind of try and bring Israel to the table a little bit quicker than maybe they're doing so at the moment. So you have to keep an eye on it. If you notice the share prices of some of the kind of sensitive companies, like say the paint companies, they haven't really reacted. So I would say that at this point, the market's saying, it's still going to be okay. It's just spike because of the tensions, rather than there's going to be more action.
All right, and to add to what Andrew was saying, oil certainly, by the way, has been on the boil, but the markets are giving it a cold shoulder right now. I mean, Krishna, $91 a barrel. We have not seen this level, as you pointed out, since October 2023. So a 5-month high on oil, and we are approaching uncomfortable territory if we are not already there. But remember, oil, I mean, we are net importers of oil, so that definitely, lends to inflationary pressures as well. And even Mr. Das, in his speech, this morning said that the oil component has helped, the decline in oil prices has helped inflation, keep inflation in check, especially the headline number. And it's back on the rise. It's, surging once again. In 2024 alone, in the first 3 months, oil prices are picked up by about 20%. And not just, on a macroeconomic level, but a lot of industries, they are dependent on oil because it's a key raw material for them. Paints come to mind, rubber comes to mind, chemicals come to mind, even pharma for that matter. So a continuous surge in oil prices will definitely squeeze out the profit margins for them. So it's a double whammy for us if you look at it, because it will add to the inflationary pressures, and at the same time it will squeeze out the profit margins of India Inc.
Right, and of course that will also make it difficult for us to keep that inflation figure in check as well.